Hi guys, welcome to Savvy Money Show. Me, your host Sean. Sorry about the background noise, I am outside. So today's video is about how I'm riding free CRISPR and Beam shares here on. Now, if you're following the channel, you know I have high conviction in biotech and especially CRISPR, Beam and Intellia. They are my favourite free ones at the moment. And I was telling people to load the boat of CRISPR when it was below 40. Now, I did load the boat. I also took a large amount of calls when it was $1.87 for, which is $187 for January 2024. And I sold out my initial investment on them when they ran up, and I kept free calls to manage my risk, and I sold the remaining ones when they hit $17.60 per call, which was a 9x. I put a remainder into. Don't forget to hit the lovely like button and sexy subscribe button, and don't forget the bell notification. You'll be notified when a new video gets uploaded. And the free links in the description below. You can pick up a free share worth up to £200. And check out our Discord. And if you want a more in-depth analysis of any stock or market conditions, then why not look at our upgraded membership program and support us. I put a reminder into Beam, which was $20, and I said load the boat in Beam at $20 or less, which I did, and that has run up. Now, yesterday, like I said on TikTok, I have sold out of all my calls in both companies, and I worked out, as I mentioned on Twitter as well, if I sold 11 of my CRISPR shares and 21, it was originally 51, but because of the calls running up, it came down to 21 of my Beam shares, then I would be holding these free house money. It wouldn't cost me anything, which means if there was a crash or any bad news comes out and drops the share price again, I could pick up a massive amount. It also means that the huge amount of shares that I'm holding can be, whatever happens, is free money here on. So I sold the 11 shares of CRISPR at $72 a share, and the Beam, I sold the 21 shares at $30.60 a share. Now, I did say on TikTok that I would be buying Intellia if it was under $30, and I did pick up a few, but I do have an average of $29 on the Intellia now, and I do want it to be below $29 for me to pick up more. There's been nothing but good news coming out for it, in my opinion. Yes, the cash burn has increased, but I don't think that's an issue for them. I do think they'll sell off 10% of one of their programs to Regeneron, and that will tide them well. You've just got to ask yourself, were you buying when it was under $40? When it was $40 and under? Nah. So I have to be a bit more select with putting my money in this. My funds from Crisp and Beam, I would have liked to have put a bit more into this, but I would want it to come to 20 to 25, but I don't think we'll find those levels anymore. I mentioned PayPal. I do like PayPal. I'm buying some from my kids' account because I have quite a big position already, and I would need it to come below 55. I like it in the $50 range, but I still do like it. I have been adding to my for those in the UK, I've been adding to my sqz Serica, and I've been trading it so that when it goes above a certain amount, I've been taking profit in free shares, and when it comes back down, I've been picking them up. There's a PE ratio of 3 and a dividend of 10, and it has good fundamentals, which I've gone through in previous videos. Check them out. Now, I mentioned on TikTok and Discord that I'm picking up Lovesac, ticker symbol LOVE. I put in an order yesterday for it, and it wasn't filled. There's a PE ratio of 20. I like what it's doing. It's one of those I would like to get it because it's market cap 303 million versus enterprise value 414 million. Forward PE of 8, price to sub 0.46, price to book 1.62, and it has a unique selling point with its furniture, but I'm not going to overpay on it, and I want it to come down a bit more. That's why my fill order didn't get filled, but we'll see next week. As I said, I was looking into Walgreens Boots Alliance. I did pick some up at $20 a share. It has a 9% dividend, which we've just missed, but I do like the fundamentals. They have just agreed to put $6 billion into the Boots pension fund, which makes me think that they're preparing to sell off Boots section. They are getting into the healthcare sector in their sites more and more, which I thought they would be sooner, but I do like the direction they're going in, and it's come down to the price that's attractive to me. I do think they're going to weather the storm. They've had a few hiccups recently, and I do think it's too big to be at this price. I understand why they're at this price, but I mentioned Crocs. I have sold out of it. If you remember, I said I was buying them between $80 and $85 a share. They ran up to, and I sold them at 95. It filled at. It was a quick $10 trade. I was willing to hold them long term, but it would have been I would have been forced to hold them very long term. They gave terrible guidance. I do think it's a good company, and I do think they have good fundamentals, but with terrible guidance, and in this market, I think there are other companies my money can do better with. I sold out of my Taylor Wimpy, which had run up 17%, and I picked up some BT Group, which I think is depressed. It's down at the COVID levels, and I think it's an infrastructure play that shouldn't be down here. I also picked up some Vodafone. I've added more Vodafone to my position. So far I was just riding 3 shares that I'd been trading, and I just think when you consider the dividend and the fundamentals, I do expect a dividend cut at some point, but I still think it's a good company and it's got great fundamentals. I do like it here. Let me know what you guys are looking at, and I'll see you in the next video. Let me know if you guys want a video on how to pay no tax and no insurance, no national insurance in the UK, and I'll see you later. If you found any of my videos helpful and you want to help me make more, you can support me by buying me a coffee. The link is in the description below.